being two friends, but we got a little bit of flack. I'll admit we got a little bit of flack for not having much behind us. So we figured this is kind of the opportunity to show off the greenery.
Got to fill in the white space,
Yeah.
It'll get better every week. There'll be more and more stuff. We'll start decorating it.
For Christmas, there will be a bulb on it, that type of thing. Yeah. But yeah, we are live from the office, our Mogul headquarters out here in DC. And so with that, I mean, we have a pretty special episode today. We are going through, if people are familiar with the iconic show, The Office, we are going through our version of the Dundies. So we are nominating up things that impacted society over the past little bit. We've taken a lot of input from friends, family, and each other. And let's kind of jump right into this. I mean, obviously, we don't exactly have the award show set up. We don't have the presenters. So
Looks good to me.
Your presenter, your host for the evening, and we'll go from there.
Judge, jury, and executioner.
So the first category is the biggest motivating factor to buy a home. I don't know about you, but the first time I bought a home, I was definitely motivated.
Well, yeah, tell me why. What was going into that? Kind of what motivated you besides getting ahead? That's our biggest thing. Obviously, you could start with that, but yeah, I just wanted to tell us a little bit more about it. Some of the stuff you ran into quick as like a quick intro.
I mean, right away, the reason I wanted to buy a home was I was moving out to Texas.
Yeah.
Everything's bigger in Texas. I don't think, I mean, that was reason in and of itself. I got the truck, the cowboy hat, not the boots, too expensive.
I got the boots.
Got the boots. Yeah. You got to get passed by a great grandpappy, your boots. But for me, it was a lot about the financial incentive behind it.
Yeah.
I know that it's the greatest wealth generator in the U.S. is residential real estate. Mm-hmm. And so I wanted to get started at a young age. And so really did it in as lean a fashion as possible. 5% down, got 3% back, went through and got my broker real estate license out in Texas, 108 hours of coursework and 9 exams later. Got that 3% back, scraped it off as a tax-free rebate. And it ultimately, it paid off because we offer it as the first property on our platform today. And so with that, I think we can jump into the first nominee of the night, existential dread. I mean, you want to talk through?
Okay, yeah, maybe we can relate to how we kind of were.
Oh, I didn't realize. Hold on. We're not even. Is it on?
Oh, yeah, yeah. Been monitoring it. Let's relate it back to kind of what we did. So yeah, similar thing. I think wanted to get ahead buying first time home when I moved to Dallas as well with Stacy. And I would say that existential dread definitely played into it. One, because it's like, what is my purpose here? Like, what am I doing with my life? I definitely just graduated college. Now out in the real world, there's no structure. There's no one telling you what to do, right? And it's like, where am I going next? Like, am I just going to fall into the system, get an apartment, start renting an apartment? It's like, no, let's do something a little different. You know what I mean? Let's like make it seem like deriving some value, some purpose from an asset purchase. And what better way to do it than with a home, right? So existential dread, really big motivating factor, I think, arguably in most things you do in life, but especially when it comes to buying a home. Would you agree with that synopsis?
I mean, longevity is always a question. Steve Jobs always used to think that he was going to die young, and so that's why he accomplished everything in his life. And it's a massive motivating factor. I don't know if it drove the hysteria over the past year, but that's nominee number one.
Yeah.
So outside of existential dread, what do we got next? The American dream. So everyone knows, come to America, the big thing is I want to buy a home. By buying a home, you're really presenting yourself as a route in the American dream. It's the property ownership is a big part. But for the past few years, we've noticed that home buying is actually trending downward or upwards. Downwards from an impact on our lives perspective, but upward from 2021, average home buying age was 33. Today in 2020 or 2023, average home buying age is 35.
Wow.
I mean, that is significantly up a few years back, just due to interest rates, the hysteria that went along with it.
Yeah.
Everyone seems to have become a residential real estate expert because when you throw a dart at something that's always going up, it's hard to claim that you're not
Yeah, no, that's so true. Everyone wants to be a homeowner. Everyone wants to reap the rewards. What better way to do that than through real estate? What better way to do that through Mogul?
Exactly. So when you buy through Mogul, you are a real estate owner.
Yep.
So be it existential dread, the American dream, or our next one, you become a real estate owner.
Yep.
So with that, next nominee, interest rate cuts. You want us to walk us through an overview as to what this means, why it impacts real estate, and why it is that it's one of the biggest motivating factors to buy it.
100%, 100%. So obviously, big news recently. What is it? 3 cuts by the end of the year? Is that the latest? Correct me if I'm wrong.
I believe so.
Believe so.
Yeah.
Correct me if I'm wrong on that, but anyone call me out. But current Fed rate, like between 5.25, 5.5 right now. Prime rate is around 8.25, 8.5. What does that mean, right? Essentially, those rates denote our cost of borrowing as consumers and denote kind of the synonymous with yields, right? That people hit when it comes to products distributed by the Fed, when it comes to our cost of capital for investment products on the private side that we would like to hit with yield to beat that cost of capital. It drives a lot of things, right? And so these rates essentially are specifically for home buying, determining how much that we need to pay each year on the principal that we secure from a mortgage that we're going out to buy a home, right? Several different types of mortgages, several different types of structures. But when you're talking about kind of your conventional mortgage on usually like a 30-year fixed rate, right, to go out and buy some property with some leverage, you're talking about 75 to 80% of that property's value that's accounted for by that mortgage. If that rate is kind of at 7% that we're typically seeing on average right now in the 30-year fixed market, you're going to want to make sure that if it's an investment product, your property is at least yielding that 7% plus to make sure that that leverage is accretive, right? To make sure that that leverage is valuable to you as the borrower. And so what does that mean for interest rate cuts? Hopefully they're going to be coming down, and that's going to create a massive frenzy, arguably very, very impactful. I mean, not arguably, definitely impactful. Arguably, compared to the others, we'll talk about it. But that's a little bit of background about what interest rate means right now. Hopefully the cuts continue to come to reality, I guess, come to light over the next, call it already in April, 8 months now. We'll wait and see. Jay Powell has some plans in mind, and we're just waiting.
Yeah, I mean, interest rates go down, prices go up.
Yep.
That's kind of the way of life.
Yep.
The last nominee of the night for biggest motivating factor to buy a home, FOMO. I mean, if you look at any of the financial influencers over the last little bit, I mean, it's pretty wild. The amount of fear of missing out has driven the hysteria that is home buying today.
Definitely.
I mean, I pulled a stat recently that was, this is wild. This is the stat, by the way. Statista found that as of 2013, 56% of Americans experience FOMO.
Interesting.
Define
that.
I don't know. I was left out of the survey.
FOMO on the survey.
FOMO on the survey. So I don't know. I think we can wrap that one up with FOMO.
Does that relate to home buying specifically? Is that kind of what the stat is?
No, that's literally
just in
FOMO
general.
Yeah, that's just generally. I just thought that was an interesting stat, and the fact that like everyone in your brother's like, I'm buying real estate today, like all that stuff. It's like, it's great, but at the same time, it's become an marketplace. However, through Mogul, we're able to source deals with on and off market and circumventing due on sale, which is sub 4% mortgage in today's interest rate environment for some of our properties, yielding 9%. That's the quick plug. Anyway, what do you think? Biggest motivating factor, who takes home?
I mean, that plug, by the way, just gave me FOMO about the platform. If you want to invest after this, but existential dread, American dream, interest rate cuts, FOMO. Obviously, we know interest rate cuts are very impactful when it comes to objectively what's going to be affecting the home buying frenzy. So I don't know. Kind of throw that one out there probably as the winner, but I'm curious to hear your thoughts.
My rash mind thinks yes, it's interest rate cuts. I mean, like it impacts every part of this. It plays into FOMO.
Yeah.
FOMO wouldn't be here without interest rate cuts. People wouldn't be able to buy the homes they were able to buy. Right. The American dream going away. It's kind of ridiculous. The buying age has gone up significantly, and the aging population in place. well as just a number of different factors playing into it. The amount of people looking to buy homes right now is at its greatest it's ever been. And then existential dread. I mean, that follows us everywhere. I mean, that's with me in the shower in the morning. That's with me walking down the hallways. So I would just say, like, interest rate cuts, it's the most rash. And so interest rate cuts takes it.
Yeah, I'd agree with that for sure.
So on to the next category. This one's fun. Biggest impact on the economy. Obviously, we had some incredible events that took place over the last little bit. A lot of things. Oh, weird. Our audio seems to be cutting out. Huh. You getting? Anyway. Anyway, so with that, the big events that had occurred over the last little bit, I would say, let's just jump right into it.
Yeah.
What are the nominees?
Yeah.
Taylor Swift. How can we start a talk about the economy without Taylor Swift?
Right.
I mean, it's ridiculous. We cannot. It's anyway. Taylor Swift.
Yeah, I mean, let's
dive into the numbers, shall we?
Yeah.
I think the Swiftonomics, the Swifties, so to speak, she's generated. These are the stats. I kid you not.
Hit us.
$5 billion in consumer spending.
Wild.
In the U.S. alone.
Wild. From
her Eras tour. I'm not talking about gross ticket sales, which were at $1 billion, mind you. I'm talking about people booking flights to random cities to bumblefuck nowhere to attend an Eras concert that's 4 hours long. Are you kidding me?
I have people that I know that are booking international tickets to go see the concert in other countries because the cost is less than the American ticket, and you can justify even the flight with the cost that savings from the American ticket to the abroad ticket. I kid you not.
I can't even. I don't even want to begin to think about that whole thing. But bumblefuck nowhere.
Yeah.
Attending a concert 4 hours long. People are wearing diapers to get through it. And so
people are wearing diapers.
Pretty wild. I mean, even if you think about that's the impact on the U.S. alone. The fact that she has 50 other countries on this tour, Time Person of the Year, 400% increase in Travis Kelce jerseys just from the placement of her alone in the NFL.
Yeah.
I mean, this is also a wild stat. I don't know how much weight we actually want to put it, but women between the ages of 12 to 17 watching football increased 53%.
That's significant.
That's significant.
Very.
Yeah. So wild to think, to say the least. So Taylor Swift, massive impact on the economy over the last little bit. Let's dive into the next one, shall we?
Barbenheimer, classic. I mean, we all were victims or participants, maybe what's a better word, of the media frenzy that went into Barbenheimer. I went and saw Oppenheimer. I know everyone here went and saw both.
You just raise your hand.
So yeah, I mean, let's just get into some of the numbers around it, right? We can speculate on the weight of these things all day long, but let's get to the cold hard numbers. So apparently, B of A, the consumer spending on non-gas items went up a whole 2%, almost about 1.9% year over year, the week that Oppenheimer came out. So that's insane. Like, just think about that. Or I guess the week that both came out, right?
Yeah.
They were released at the same time. I guess you can see where I stand on the battle between the two. But insane. Like, that's truly like economy shifting news. I mean, that's not a small. That's truly groundbreaking. Earlier in July that year, last year spending was completely flat compared to July 2022. $162 million opening for Barbie and $82 million opening for Oppenheimer. Not bad, right? Relative to some of the bigger openings that happened that year, obviously two of the largest. And that doesn't even account for all of the other media deals, marketing spend that was going into it. Insanely high kind of effect on everything else. And then apparently Fed rate Jerome Powell was even asked on Wednesday about how demand for Barbie and Taylor Swift concerts is broader economy. The fact that that's even asked is wild. Can you imagine that? Asking questions about media frenzy news in actual hearings? I mean, that's just crazy.
That goes along the lines of like when McDonald's what was
Grimace? Yeah.
Grimace's birthday.
Yes.
The CEO was asked, like, will you be doing more of Grimace's birthday? And in the earnings call, yes. Yeah. So that's wild, the fact that Jay Powell has to comment on it. And so that brings us to our next nominee. You know him. You love him. Jay Powell.
Oh, yeah.
I mean, whoa. Come on.
A regular on the show.
Give him up. I mean, interest rates play such a massive part in real estate. So we are we're hanging on the word of him like a Taylor Swift song.
Absolutely.
It's equivalent in our minds, the star power that he brings to the table.
It's
true. If you think about what he did over the last little bit, inflation at an all-time high.
Yeah.
9%. Yeah. And he managed to come down. It's 3%. Unemployment rate is down to its lowest ever, its 50-year high for employment. And he raised rates 11 times. 11 times. Just when he thought he couldn't, he kept raising.
What a weird time, and the artificial cycle that was created by the pandemic.
Just the pure ridiculousness.
Yeah. And the thing is, there's so much that's affected by that. Like, people don't even realize the true scale of everything that's affected by that. I mean, the cost of your Taylor Swift tickets, the cost of your movie tickets, all affected directly by those decisions. Truly.
I mean, the fact that in combination with like record high interest rates, the fact that you're probably taking out credit, put in Taylor Swift and mortgage your home for that Taylor Swift ticket.
Sure.
Like, and the fact that we're coming to a pretty small planet, I mean, don't jinx it so far, but the fact that the economy is kind of rocking, and it's been ridiculous even with record high, or not record high, because I mean, everyone will argue that 7% is not actually that much, or 5 with what is the Fed fund rate.
Yeah, right now.
So that's kind of ridiculous. He's obviously had a massive impact. Next nominee, AI.
I mean, obviously, right? Biggest talk right now in the market. No one's not talking about it. Classic double negative. I think it's one of the biggest buzzwords when it comes to the VC investing, when it comes to what's driving public returns, right? With NVIDIA, I think everyone has exposure there, and their mother, right? Everyone's still buying, even at all-time highs of prices. Everyone's talking about it. I mean, truly every aspect of the economy is directly affected by applications of AI. Talks about AI, future applications, medical innovation, right, which you would know about. Yeah, I mean, any other thoughts in terms of like further stats that go into that?
I mean, use of Gen AI is expected to boost GDP by 7%, nearly $7 trillion. And it's supposed to boost productivity by about 1.5%. This is, again, a GS report that was found. The IMF said that it will impact 60% of jobs. If you're thinking about it, everyone's like, oh, AI is going to take my job. But the thing is, if you look over the past, every single technological advancement over the last little bit, everyone talks about this bank teller analogy. And everyone's like, there came about a machine that could distribute money to users without having to interface directly with the bank teller. This is going to cut down on the bank teller industry. Right. It's going to affect that immediately. It actually increased the amount of bank tellers because that ATM allowed them to open up so many more banks.
Right.
And the efficiency that it created, that it actually drove increase in bank tellers as opposed to a decrease. So technological advancement just drives to efficiency in the workplace, which ultimately is a cycle that pays it by more as opposed to less.
100%. Like I would say that a lot of it is complementary, and a lot of the productivity generation that it creates, whether it is additional jobs, whether it's additional innovation that then creates more jobs. I think it's really just an advancement for people to also like develop their skills, right? As the economy changes, as needs and demand changes in different sectors, I think it's a matter of innovating and growing, themselves. Like you and I are changing all the time. Different technologies that we're learning, different skills that we're developing, different areas of investing that we're working through, different product types of real estate that we're coming up with, right? It's all about innovation. It's all about changing. And I think it's just a massive catalyst, right? Just like you were saying, to essentially how we live, work, and play.
I mean, the fact that this entire presentation don't worry.
Hey, everyone! I know everyone's guilty of that. I know every single one of you is guilty of that.
Beautiful presentation. Just it's so. I guess what is the biggest impact on the economy? If you jumped in the first, I'll jump in this one.
Whoa!
Listen, I don't love her music. I'm gonna say that, but I respect.
Wow, that's a hot take.
I know. but I respect the hell out of her as a businesswoman.
Yes,
I think she's one of the. I think her team is incredible. I think she's incredible. She's driven a ridiculous. I mean, who the like? You didn't think about this. You didn't think about a musician doing this crazy of an economic world tour when you needed it most. I don't know if she partnered up with Jay Powell. I don't know if they timed it just perfectly, but the consumer spending that went into the Eras tour, $5 billion plus from one person singing 3 hours long. Ridiculous.
And we're not even accounting for definitely billions of dollars of commerce that's just going through secondary sales, like a bunch of different stuff that comes from that. I will say too, just funny anecdote. So Tim actually was talking to my mom the other day, Rosa Rios, for the Treasury of the United States. Obviously, she's all over our website as well. She asked him literally, who is the one person that you would meet if you could right now? Obviously, he could meet anyone he wants, no question about that. He literally said Taylor Swift. Just like you said, because he respects her as one of the best marketers of all time. As do I. I mean, there's no arguing against it. You can love or hate her music. You can love it or hate her persona, her brand that she's created, but it's a powerful one, and it's shaking the ground quite literally.
That's incredible. That was good. I mean, it is ridiculous.
It's ridiculous.
It's oh god, or who was it? It was like Drake that rapped. I'm not scared to drop it on an album on any weekend except the tail.
Yeah, that's crazy.
Speaking of which, Beyonce just went country, but that's a side note. Anyway, happy Friday. Biggest M&A of the year. This is pretty interesting. I mean, this is definitely like one of the drier of the awards. I mean, this is like
important to us.
I mean, this is the arts and directorial department, of the Dundie Award. So I'd say biggest M&A of the year. We can start it off. I don't know if you want to dig into it or I can. I
hit it.
So right off the bat, Capital One buying Discovery. Or Discover. My bad.
Yeah.
Capital One buying Discover. I mean, right off the bat, $36 billion for that acquisition. $35 billion. Two of the largest credit card companies. It's an all-stock deal, premium of 27%. I mean, Cap One is the 9th largest bank in the U.S. So right away, they're going to have a market power that is absolutely incredible. And by that, I mean everything that we do when we transact on credit cards is determined by the fees that are charged as a result of that. And so two powerhouses coming together and being able to basically negotiate their fees against that's not great. Merchants are already actually trying to come back and say we should cut down on fees, but
conflict of interest.
It's going to be bad. This is why blockchain plays into
True.
it. But anyway, our fees on our thing, by the way, paying ACH transfer, $3 easy, automatic, no matter if you're investing $10K, $20K, $100K, $3 easy.
That's great.
So, I mean, next one, it's not the biggest by dollar value, but it's nearest and dearest to our heart.
Definitely. Super important for our platform, super important for the world of real estate. Obviously, everyone's probably heard about the Blackstone Tricon acquisition take private. So, that was big. We talked about it multiple times on our show and kind of all over the platform as well. But just to dive into some of the additional details, right now, Blackstone has a lot of plans, obviously, in the world of real estate, the single-family rental development, capital investment, restructuring, aggregation strategies. They're definitely one of the biggest players. Paul, Alex, and I worked with Sachs. They were always on the radar, no question about it, as one of our biggest competitors as we were building out that business. Tricon, massive GP operator, boots on the ground, fully integrated vertical. They came across our desk a bunch of times too. Really cool opportunities there. So right now, Tricon has a single-family rental development platform in the U.S. with approximately 2,500 houses under development, as well as numerous land development projects all over the U.S. that can support future development of nearly about 21,000 additional homes. That's a lot of supply when we're thinking about kind of the demand frenzy that we always talk about. Like, who's building these homes? It's groups like this, like 21,000, and you don't even hear about that. That's a lot of units. You and I are going to be looking at a lot of stuff with our licenses, or we're transacting for new home builders. You know what I'm saying? It's a lot. So this is truly groundbreaking stuff. Not only that, but they have a lot of Canadian development that they're currently doing right now. About $5,500 of market multifamily units that are in the pipeline. So, these are ground-shaking, ground-breaking supply. I mean, this is going to be a massive wave of portfolio that comes in, essentially allows that supply to be dumped out into the market. It's going to meet that demand that's coming from the capital market side, both from the consumer side and also institutional. So as institutional continues to play out their aggregation strategies on single-family rentals, buy big portfolios, buy single-family rental developments, SFR communities, restructure, resell, repackage, recapitalize. This is going to have a massive impact on us as home buyers, on you as home buyers, on everyone else out there that's looking to be first-time home buyers, investment property home buyers. How is Mogul going about handling a lot of this stuff? Maybe you want to talk through some of that?
Aggregation strategy. We're sourcing deals both on, off, and pre-market. We're doing it in interesting financing ways. I mean, the ability to circumvent due on sale with a number of different properties coming up means we're sub 4% mortgage in today's interest rate environment.
Jesus.
That's a 2.625% mortgage rate on our first property on platform.
Crazy.
Yields right now for us on an average property basis, invest 100K, you get 10K back, around 9 to 10%, 9 to 10K, I would say. And so for us, we're pretty market agnostic because of the financing products that we are able to source both on and off markets. So always an opportunity to buy. With that supply coming online, I would say we're targeting markets that are away from that primarily, but also similarly in the path of growth. And so we still see massive opportunities to grow, but the supply and demand dynamics that we see within the local markets that we target, they're A+.
Absolutely.
I mean, they have an upside that's tremendous. We're not going after the Austins of the world because we know that it's saturated with just the amount of people going towards that area. But the demand around it has dropped off. I mean, the supply that's come online, everyone has started developing like crazy around there. So we're in the Houston and Dallas markets, where it's still massive. Supply is not coming online nearly as fast as it was in Austin because everyone was down. It was the pandemic.
Yeah, it was.
City.
It was.
So that's enough on that. This next one, you can cover it. It's you can't say an M&A without this.
Yeah, and especially in terms of size.
And Ansys, $35 billion acquisition. Synopsys acquiring Ansys for that. It was a mix of cash on hand, debt financing, and equity. This is a semiconductor chip play, and so basically the way that semiconductors work when they build on top of one another, it's kind of like stacking a building, but obviously on a very minute or micro scale. And so what this allows it to do is there's a simulation product that basically allows chip companies like Synopsys to be able to lay out the chip circuitry prior to the manufacturing.
Interesting.
I mean, so imagine being able to lay out the building in 3D and then go about building it and testing every single durability of it, how it would perform under X, Y, and Z pressure. And so that's kind of what we've got here is two of the massive powerhouses. Synopsys has said this will grow their addressable market by 50% to $28 billion. This just goes to show you that M&A is alive and well, especially within this next year. There's a little bit of slowdown. Interest rates, again, Jay Powell, we like to mention him from time to time, but we should get him on. I don't know how we do.
Yes, so we need to get that. You will be on as a guest at some point. We can promise you that.
Maybe collect the award. We'll send Taylor her award later. But this just goes to show you that like the interest rates, the fact that they're going to be coming down every year, according to what the Fed has been saying, means that more of these M&A deals will happen. Capital markets are returning somewhat back to normal in terms of new issuances. Reddit just came out, skyrocketed in their debut. And so this is just another point towards the capital markets rebound, the environment that we like to see, especially as we're going out and sourcing the properties that we are.
Yeah, lots of dry powder out there right now. Lots of dry powder that people are sitting on. I think there's going to be a massive explosion coming into here.
I mean, ridiculous. Yeah. It's like the war chests that were accumulated in 2021 and 2022. Like those fund lives are coming to the end. Like they have to do that for risk losing them.
True. That's true. I mean, horizons exist.
That goes into our next deal.
Yes.
Truist Insurance Company being bought. It's a subsidiary of Truist being bought by CD&R and Stone Point. I mean, if you want to run through
some of them.
Yeah. Oh yeah.
Yep. Yeah. So as Alex said, Stone Point and CDR are in an agreement to buy the bulk of Truist that they don't already own for a net proceed to the seller Truist. So this sale is going to be valued around $15.5 billion, relatively very large M&A currently now. Subsidiary in Truist, the Truist Insurance Holdings is going to be specifically where the capital flow will be allocated towards, and sale will strengthen Truist balance sheet and enhance strategic flexibility to invest in core banking strategies. So very cool stuff. Positions Truist and insurance holdings for continued growth and rapidly evolving insurance brokerage market. Essentially, this is going to allow them to continue their expansion as a broker as well. That'd be huge. So definitely a lot of activity there. This is going to be people. You might not think you're directly affected by stuff like this, but one, from a capital markets perspective, it is very, very impactful. And then two, also from insurance perspectives as well. I mean, everyone has insurance on everything operate, especially when it comes from to an asset perspective, life insurance also as well. So yeah, there's definitely going to be a lot of activity coming from that. Curious if you have additional thoughts there.
Oh yeah, I mean CDNR and Stone Point. A lot of the people that are saying why the deal took place, or one of the reasons why they were analyzing it, was the fact that they're sitting on a bunch of dry capital, and so they're under a rush to deploy those or risk losing out on potential management as well as performance fees. Insurance is one of the safest bets when it comes to private equity giants. They trade hands like crazy. That's why the insurance sector is all top for M&A, because a lot of these companies are buying up and selling insurance companies on kind of like a 5 to 7 year hold. They know that people are always going to need insurance. The premium typically outweighs, and the sound, like the safety of mind of having insurance is so much less costly, or more costly, I would say, than actually paying the insurance.
And how hard they've paying out that insurance.
Yeah, it's
no secret.
It's ridiculous. I would say we have the insurance. We take out property man or landlord property insurance, typical property insurance. So we're covered against structural defects. We're covered against potential loss of revenue as it relates to property going offline. So if property goes offline and it's a major structural defect, the property manager or the landlord insurance will cover it at market rate. So it'll still be yielding, even though it's kind of off market, which actually helps because the depreciation physically of the asset is coming down. But
absolutely, that applies to force majeure, acts of God, weather, all across the board. We're covered. I think we talked through in several steps how that exactly applies. So we'll save that for another time.
So
when talking impact on all of us in the market, what are you thinking? You're an M&A specialist, investment banking background. I'm curious to hear your thoughts, because I would love to hear some of your analysis and learn.
So, I mean, Capital One, it's going to be like it'll be under the radar a lot. We'll start experiencing it kind of like with the interchange fees that I mentioned earlier. The Synopsis and Analyst one, it'll just impact us in largely down market, I would say. So where the price point that we come in at, maybe the margin either gets cut down a little bit, or we get impacted by a little bit higher of a price for the chips that we're buying. The Truist and CDR and Stone Point, that's been around for a while. I mean, just in terms of buying insurance companies. So in terms of impact.
Yep.
And I'm not saying this just because it's residential. I'm not saying it just because it's residential. This is kind of like when, who was it? Beck won Album of the year that like Beyonce had an album.
Oh yeah.
Yeah. So it's like that, but a little bit better, because Blackstone and Tricom, I'm going to say, the fact that there's going to be supply coming online will impact us on a daily basis. The fact that they bought it for that much means that a lot of institutions are going to be flooding into the single-family rental space. What a massive positive indicator for the housing market and for products like us, where properties are coming online, we're sourcing them off the free market, we're getting them, and just higher returning overall. And so I would say, in terms of impact, I don't know if you agree or disagree. The committee, what do we think?
Very agree. Blackstone and Tricon takes it all the way. Anyone that's out there buying a home is going to be directly impacted by this in very good ways. Anyone that's investing on Mogul is going to benefit from this, just as Alex eloquently. So we're going to take that.
Good for us.
Come accept your award.
Schwartzman. Where are you at? Right. So we'll get Jay Powell, Schwartzman, and Taylor Swift in a room. It'll be all good. It's super easy to do.
That's the Illuminati right there.
They have no major scheduling conflicts ever. So not COVID trend impacting home prices. And I'm saying this because we went through a pandemic. everything was shut down. The world came to a halt, and then it really picked back up again. But there's still some lasting impact. Like, long COVID is not the only thing that's impacting trends today.
True.
And so if we're going to dive into what's impacting home prices as it relates to COVID, number one, work from home hybrid work.
Yep.
What do you think? Do you want to rip into this?
Yeah. So the data is saying that 24% increase in home values between 2019 and 2021, 60% of that was attributed directly to the work from home trend. So we talked about it before. Essentially what happens is there's a lot of out-migration from core cities, your New York, your LA, your San Francisco of the world. People are essentially flowing out into more suburban/rural areas where home prices initially were at a much lower cost basis than what you would find in those core cities. They're buying all of those up, subsequently increasing those home prices, right? We've seen in the data. And so that's happening all around the US. Not only is there out-migration from cities, but also from core states into a lot of other states that didn't experience as high of growth as before the pandemic and a lot of the artificial shifts that happened. Texas is a perfect example of that, as we talked about many times. You're seeing a lot in Tennessee. You're seeing a lot in the Carolinas. Georgia is a massive beneficiary of it. So we'll continue to see a lot of growth, and you'll see a lot of opportunities that we're talking about, a lot of those high growth secondary markets that haven't topped out in value yet. So great. A lot of good stuff to cover there. We can talk about it for hours, but I think that's a good overview of what's happening there.
I couldn't have said it better myself, and I think it hybrid work is pretty well just what's happening.
Yeah.
I mean, there was an article that came out yesterday in terms of what happened on Fridays.
Yeah.
Did you see that in
No.
the Wall Street Journal? Like half
Nothing.
days are like every employer is like freaking out because they're like, I'm worried that all my employees think it's a 4-day work week.
Yeah.
They're leaving. They're not coming to the office. The average cutting out time, I think, is like at 4
Oh,
p.m.
wow. Every
on
day?
Fridays.
Oh, on Friday. Yeah.
It's like 5 for weekdays, but on Fridays in particular, it's like 4.
And that's what people are saying on surveys. We know it's actually like 2.
Fucking blatant on it. Yeah.
We know it's
the amount of people that just log in, go run 16 errands, and then come back and are like, 4 p.m. Guess it's closing time.
I think that's a misprint. I think it's 4 p.m. on Thursday. By the way, we're not hating on it. Just being honest about what's really happening.
It's quite quitting rampage happening.
Yes.
What's the next one? Do-it-yourself projects. I mean, this is just a combination of a million different things. Interest rates, the fact that HGTV, selling Sunset, and YouTube with caged animals in the COVID pandemic. I mean, I wanted to hit shit. I don't know about you. I wanted to like bang nails into walls and form decks. I didn't know why I needed a deck, but I needed a deck during the pandemic. And so do-it-yourself projects were at an all-time high. 100%. It was wild to see. I mean, just stats right off the bat. While U.S. economy shrank during 2020, it shrank 3.5%. Do-it-yourself projects grew 3%. Consumer spending in that regard. And there was a 15% growth from 2021 to 2022 in terms of do-it-yourself projects. This is a combination of a few different things.
Yep.
Interest rates as low as possible. You can borrow against your do-it-yourself project. There were a lot of DIY construction loans going out that were at a lower interest rate. If you think about, there was a company that Goldman actually bought, Green Sky. And they were a lender in the consumer do-it-yourself project business, and so they were booming like crazy. Goldman ultimately did sell off Green Sky, which is not as great, but it's fine. But people were looking to make these projects add value to their home. They saw this as a way to like fix or flip, or at the same time do the thing that they wanted to do, and give them a project, give them a sense of purpose during that pandemic, during a hard time. I mean, for instance, for me, I did a few.
I did too. Yeah, I replaced the whole sink. Oh yeah, home theater. That's a big one. Yeah.
Home theater.
That's a big one.
Replaced the sink?
I replaced the whole sink. Yeah, like went under the sink and physically did the whole thing. About 4 hours on YouTube. Grime and gross all over my body. Stacy watched the whole thing. She can attest to it. It was hilarious. Did a whole thing. Went to Home Depot, bought the actual new sink fixtures, brought it home, did all the unscrewing myself. Didn't have half the tools that I needed. Had to go back and get them.
I'm calling bullshit on this.
We'll have to have a direct direct input to you from Stacy. We'll probably update on that every. Yeah, install the sink in the Pico's. Yeah, 1500.
That is absolutely.
I think the home theater is bigger than that. I mean,
are you fucking kidding? Home theater? I was just trying to get the bass. Like Dune had just come out. I was like, I don't want to go to the theater. I'm gonna do Dune.
That's hilarious. The reason I did it actually was shout out to one of our favorite guys out in Dallas, Jose, who's still out there crushing it right now. But no, I remember contracting prices were, I think, like 70% coming out of the pandemic. One, because obviously a lot of contractors couldn't do work in person during the actual pandemic itself, so prices dropped. And then coming out of the pandemic, like Alex was saying, everyone and their mother, not only were they investing in new homes, but they wanted capital improvement on their homes. So contractor prices relatively year over year went up super high, but then also from a baseline perspective about where they were pre-pandemic, they were up significantly. So going out and getting a contractor, I don't know if you remember, and I was going through something myself, huge pain in the ass. No one wanted to do it. So what's the best next thing? DIY projects. I think it's pretty obvious why that was happening.
Just anyway, DIY projects. Clearly, I mean, that was. I didn't realize that would be the unsung hero. And that went in.
Definitely.
Ruralization. You touched on a little bit. Go into the ruralization of America.
Yeah. So I mean, suburbia, right? That's always existed since the dawn of time. Obviously, the '50s boom coming out of the war, massive shift to suburbia, kind of the ideal of the suburban household, the idea of the suburban family. Right now, something that's kind of happening more currently is ruralization. So a lot of the things that, again, that are coming out of the pandemic and the shifts in the work from home trends are that people want to get out of those core cities. They want to be living in places where they can either be remote or just commute to work, right? There was also a massive upswing in new car sales, used car sales that we saw coming out of the pandemic. And I think one of the things that's happening now, especially with the growth of platforms like Zillow, Redfin, people getting their own licenses, Alex. It's good to be me. So, I think one of the things that's happening now is a lot of people are buying those homes, new and old, out in rural areas. And what's happening is those cost bases are a lot lower. They're also driving up prices. A lot of expansion is happening in terms of population density. If you look at a heat map in the U.S. right now, over the past kind of 24 months of what's happening, again, between a lot of those core cities, you're going to see a massive upswing in a lot of areas that weren't before highly populated. So just a little bit of stats around that too. I mean, mean distance to work rose from 10 miles to 27 miles between 2019 and 2023. It's over double, almost triple. So that's really wild because if you think about it, commutes, everyone hates commutes. No one wants to be in 10 miles of traffic, 30 miles of traffic. But with ruralization, right, a lot of those miles are covered in shorter times because of the fact that population density is lower. So wild stat. I mean, that's definitely very telling about what's happening right now in the world of ruralization. Another one out there is more than 50 miles rose 0.8% of commuters to 5.5%. That is crazy. 50-mile commute. And hopefully that doesn't include the private jets and private helicopters coming into New York.
I live in Kansas City and commuting to Japan.
Yeah, exactly. My 50 country.
Yeah, just ridiculous. Wow. Like during the pandemic, I was like, oh, I moved out to the Jersey Shore.
Right.
Like, your job's in Manhattan. Like, oh, don't worry, I'll take what?
That's crazy. I mean, yeah, we're seeing a lot of wild shit happen. No question.
Oh my God. So ruralization is up there. Financial literacy. So this is actually kind of a tough one.
I like the picture you chose. I just noticed that first time.
Yeah, I mean,
amazing.
It's pretty fucking cute. Admit it. It's a piggy bank. We use a piggy bank. I'd love a piggy bank. Are you kidding?
I mean, I do. It's called Mogul.
Oh shit! Oh God! Didn't have to do it to him, but you did. You did. So you can use this as a piggy bank. I mean, I use a cookie jar. So don't check. But financial literacy, it's actually quite sad. Financial literacy is actually the educational resources out there. Is so high. It's at the highest it's ever been. We got ChatGPT. I mean, granted, definitely do your research. If you get financial advice from ChatGPT, but the fact that there's all these different materials that you could use to learn more about financial literacy, it's quite shocking that it's actually been dumping off.
Right.
And in a world where GameStop and all these meme stocks happen, right, people are actually getting a little bit more financially literate and a little bit more financially sound because they're starting to care about that. Not saying GameStop was a financially illiterate decision. That was a mob mentality attacking short sellers. But financial literacy is a pretty tough thing to talk about because it's sad that it's falling, but you think it's coming up. It's actually not.
Right.
And so a lot of people are out there going to YouTube and trying to talk to, and I mean, we're on YouTube, right? LinkedIn, whatever. But at the same time, it's kind of sad. And so financially literacy, especially now that there's this increase in age for home ownership, and it's seeming farther and farther off, the incentive to become financially literate is actually going away.
Right.
So platforms like us, we can offer the ability for someone to invest starting at $250, putting it aside once a week, putting it into a high quality residential asset vetted by 2 real estate investment professionals from Goldman Sachs who have done this for billions of dollars that are high quality, high caliber. And so the ability for this to happen on our platform, I love, and it's part of the ethos we bring to it. But at the same time, it gives a learn while you earn approach. A lot of good resources.
I like that. Earn while you learn. I like that.
Yeah, I know it sounds super gamey, but it's very true.
And it's like you always say, you always joke about like everyone and their mother thinks that they're like a finance guru now. Oh, yeah. So also the quality of information, although it's pushed in your face every day, I'm sure has dropped off.
Oh my God, the amount of people are like, you wouldn't believe. I went to Starbucks the other day. And I used my credit reward app to get built rewards, which ultimately led back to my rent being paid on time. And they're like, what the fuck? Like, oh, I use this buy now, pay later app. Like the amount that's gonna fuck things up.
Right.
Like, oh, I'm paying I'm paying 3 cents a day for the next 20 years on my Starbucks because of buy now, pay later.
Right.
But anyway, top COVID trend impacting home prices. Go for it.
Oh, put on the spot. I don't know. After diving in, I had an opinion coming into it, but after diving into them, oh man, this is actually really tough because I was going to say like maybe work from home or even ruralization, but honestly, like DIY projects and financial literacy has a very significant impact that we can't just sleep
on. I would caveat with DIY has actually jumped off this past year.
Interesting.
It's jumped like severely come down.
Contractors are back.
Contractors are back. They did a whole South Park episode on it. Actually, that contractors are back.
That means it's real.
I will say people aren't taking on as much leverage to do these DIY projects, given they're like situated for the next few years because people aren't transacting. They don't have the ability or the desire to do DIY. So I will caveat with that. Okay. Now knowing that, what would you say?
I'm honestly going to go with ruralization.
I mean, having gone from big city to Texas.
Yeah, exactly. To Texas.
I hit it down. My dad.
Your boots and cap.
Yeah. Like, oh, what cut is that? Well, is the cat my dad got? I'm gonna say work from home, but at the same time, we'll go ruralization. It's a hybrid issue.
Yeah, and definitely massive effect. Yeah, definitely hybrid too. I like that. It covers both.
Because it's the decentralization of society into these other cities that are impacting home prices. And so I'd say urbanization is an impacting catalyst. Work from home is like part of the caveats as a bit.
Right. So, product.
So top asset class. I mean, this, to be honest with you, I'm kind of having fun with some of the more fun ones. We do have some pretty good rate of return stats. If we just want to rattle through this.
Yeah, let's rattle.
There's another one.
Let's rattle them off.
Gold.
Boom.
I mean, gold over the last little bit, it's an inflation hedge. If you go to our website, mogul.club, I'm actually doing it right now. Stats as it relates to gold over the past 30 years or so, gold returned average annual return of 5.7%. Now,
wow. For a commodity, I'm surprised, but relative to real estate, don't get me wrong.
Real estate, obviously, you can walk through briefly.
Yeah, I mean, I'll just say it headliner. Average IRR on platform right now is north of 18%. Boom.
Automatic.
Hit them with it. As we always say, our return hurdle is the 12% minimum. We're not going to take anything that's not returning at least that net 12% per year. So if you're not making $12, your first year is $100, and then a subsequent 12% of that next year, $112, we're not even going to consider it.
We don't even want it.
We don't even want it.
Just fucking go.
I might want it behind the scenes because that's still great, but we don't even want it.
Crypto, 108% year over year, but at the same time,
yeah,
it's very, 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 very risky. So I caveat with that. Okay. Stocks, I mean, GameStop, all that stuff, it can't stop the S&P 500 is up 10% year to date, which is pretty wild. AI is generating that boom. If we're going to call top asset class, I don't want to automatically say what it is, but I think I know.
I mean, yeah, go ahead.
Real estate.
Boom.
I mean,
end of story. And we will stand by that through thick and thin. When you look at averages over 30, 10, 20-year periods, it's not even close. You see massive upswings in commodities. You see massive upswings in crypto. Obviously, the public markets are completely beholden to speculation. Real estate remains king.
So the last category, term that your friend with no financial background is likely to lecture you on.
Here's the gurus, right, that we talked about.
I mean, the fact that you'll go home to a family vacation and hear an NFT pitch.
While you're playing Monopoly?
Yeah, while you're playing Monopoly, and be like, listen, it's actually like, you put in X amount of dollars today, you know what that could have been? You know, had you been back in 2012 and actually done this, you would have, like, in Bitcoin, oh my God. That's not, I think it's cool. But anyway, inflation. What about it?
What about it? I mean, inflation is inflation. Everyone thinks that they know about it. Obviously, what objective facts, you're always going to beat inflation, right? You're not just going to want to park your money in that cookie jar because you're technically losing out on a kind of baseline, lowest end kind of rate of return that you should be hitting at to make sure that your dollar is valued at par the next year and the years thereafter. Not really much else to say on it. Just want to make sure that it exists. It, like Alex was saying, massive upswings in it coming out of things like the pandemic where we topped out almost 9%. And hopefully we don't get there again because we don't want these rates to continue going up.
And I will say the pretty easy example that people use, like in a finance class, you're like, I park my money in a just personal bank account, checkings account. It's going down year over year because inflation is increasing the price around it.
Yeah.
It's hard to point to it specifically, but the fact over the past year or whatever it was that it was 9%. I mean, everyone talks about the price of Starbucks cup of coffee going up and being like, oh, fuck. But that's the true demonstration of why it's going down. So investing in something that's an inflationary hedge, like real estate, which is dividend paying rental income, 9% yield on an average basis for us, at least in our platform, it's inflation hedge. You hear that all the time. All right. Interest rates. I mean, you're the macro guy.
Yeah, I mean, what else needs to be said? We all know it. We all love them. We all hate them. We all hope they're coming down. We've talked about it nonstop. I think that there's no question about their impact on the economy in terms of people being experts on them and people lecturing on them. I don't know, actually. I don't hear about them as much relatively. That might be a hot take from your friends. You're hearing a lot of lectures.
What friends aren't talking about? God, Kyle. Kyle. Like, you know, it's like
I know my co-founder does a lot,
but because I'm trying to circumvent that. That's what we
as you should be.
Yeah. People that are like, God, the interest rates today, that's why I'm not. Like, people are always looking towards that as a reason to not buy it. It's like, if you can find good opportunities, it's like,
exactly. Or even agnostic ones.
Yeah.
Whoa.
Shut the front door. Short selling. Obviously, no one really knew what this was until this past couple of years with GameStop. Everyone was coming back from Thanksgiving or when was that? December of that year was when the OGs were in it, or November for GameStop. Anyway.
Yeah, that's about right.
No one knew what short selling was, and it's like Wall Street bets against companies. Yeah, no shit. Like they're trying to make money. If there's a bet that they can do that make money, and it means going against a company that they don't believe in, that the fundamentals are not there.
Yeah.
They're going to do it. And so what is short selling? Pretty simply put, if Joey was a bank and I decided, hey, I want to sell he's staying long, which means that he's holding stock.
Mhm.
So he has one thing at GameStop, and me as a short seller, I'm borrowing it, selling it at that price. And then we have a pre-negotiated time where you have to call back the short, and I have to give him back one stock. Right? And so if I borrow it at $20 and it goes down $10, then I buy it back at $10, give it back to Joey, but I got that $10 net. If I sell it at 20 and it goes up to 30, then I have to buy it at 30 and give it back to you. So I actually have to pay an additional $10.
And what are my potential losses if that stock continues to run?
If the stock continues to run, for you, it's nothing.
Right, but for you,
for me, it's uncapped. Yep. And so the reason being, if you bet on something that goes up, the ceiling for loss is only the price that you bought it for, your cost basis. But if I'm a short seller and that thing just runs up like it did, it's infinite.
Right.
So
scary stuff.
Next one is day trading. So this plays a little bit. I can go into this one. This one plays a little bit into what we were saying earlier about GameStop. Everyone was like, "Oh man, I quit my job. I'm a day trader now."
They say it like that.
Yeah. They say it like that. Like it's always put on. It's like it's super secretive and soft because they think they're doing something so elaborate. And I mean, look at him. Look at fucking Bradley Cooper. This is the picture that I chose. The numbers are just going around in his head.
Alan.
Oh my god! It's just like he can't. But with this, I mean, day trading, everyone seems to be quitting their jobs to become day traders of the pandemic. When it's a lottery and a casino and things are going up, you think you're making the smart choice because the numbers are telling you so. But if you look at Fooled by Randomness or any of the conventional economic theory, shout out to Dan Kahneman, Think Fast and Slow, who actually just recently passed, RIP. A lot of this is fooled by randomness because if something's going up, you immediately attribute it to, oh, it must be me. I must be the one that's making the incredibly smart decision that it's going up. But no, it's like there's 60 other things that are attributed to it that could have been driving that price up. You just so happen to be part of it. But at the same time, if it goes down, you kind of are like, oh, that wasn't me. So day trading, I'll lecture you on it a ton.
No, well said. Well explained. Definitely. I think that's definitely one that you hear about every single day. Maybe less so than during the GameStop pandemic, but you still hear about it all the time. I do.
So, I mean, what is the term that your friend is most?
Probably day trading. I don't know.
It's
always day trading, right? Everyone thinks it's a day trader. I've heard some sad stories too. Seriously sad stories about people that thought, like you said, they could just let their whole lives on becoming a day trader. What if they would have invested in real estate instead?
Shut up. No way they could have done that except through our platform. $250 minimums, you buy in, you get the tax benefit, the yield, whatever it might be. So, I mean, day trader, I think it takes it.
Yeah, I mean, everyone thinks they're a day trader, yeah.
The amount of Supreme kit wearing, or like Jordan wearing, Supreme hoodie wearing, just day traders out there that,
Did you ever try, like, with your more experience? Did you ever try?
I wanted to do arbitrage.
Yeah.
But I tried to set up a crypto arbitrage, and because I was like, it's so fucking inefficient.
Yeah.
So I tried to. I pitched to our VP at the time. I pitched to our VP to have our intern sitting in a closet and just arbitrage, like setting up an arb bot for crypto.
Yeah.
Because I was like, I think you could just mint off it. Like, I think we could get a higher return than our. No, I'm just kidding. But so with that, I mean, if you like what we have here, if you like, join us, subscribe on YouTube, follow us on LinkedIn. At the same time, sign up, register, invest in www.mogul.club. We have incredible properties that are selling out fast. They're coming online faster too. We have incredible properties coming up. Start out, try it out for $250, $1,000, park it, see what happens. I mean, we're of the mindset that we're willing to bet on this more than anything else. We're willing to stake our personal lives on it. These are ones that we're invested heavily in personally, as well as a company. So check us out there. Thank you again for joining us. We'll be back again next week. And great. Anything else?
Yeah, ring those bells. We're on every week, same time, every Friday. So we'll continue to grow the show. Give us feedback on how it's going, and look forward to seeing you next week.